and gentlemen, boys and girls. Time now for Money Info, brought to you by Princeton Research with Mike King in Las Vegas and Charles Moskowitz in lovely Boston, Massachusetts. Good morning, guys.
Good morning.
How are things going?
Well, we had a great consumer confidence number, up to 81, I believe.
Wow.
81.4.
Wow.
81.4. And it's certainly a good number to come out now while we have been plummeting, while the market had been going down. But this was the best number since 2008. But nothing compared to what we had in 2000 when the index was 180.
Right. Well, you know, it's things are changing a little bit. I mean, you know, you look at the Case-Shiller numbers, you know, 20 major metro areas, that climbed about 2.5%. Not bad. I mean, you know, not great, but not bad. And we've noticed even here, I don't know about Las Vegas, obviously, was another market that was ground zero as we were here on the Treasure Coast of Florida. But, Michael, what about, are you seeing rises in existing home sales?
Yes, and actually, this is helping confidence, isn't it?
Yeah.
People's homes are the closest thing to their economic value.
Sure.
And they are getting better. It's improving. But nothing compared to where it had been.
Oh, no.
But the confidence is nice compared, you know, with the higher payroll tax and the sequester issues. We're doing well considering the events of higher expenses.
Right.
Also, the median new home sale numbers were up 10.3%.
Yeah.
To 263,000 and change.
Well,
so that's new house price, new construction pricing.
Well, you know, it's interesting you say that, guys, because you look at Lennar, and obviously they're one of the biggest home builders in the country. They disclosed a 70% tumble in profits, but their new housing entries were up by 27% in new orders. So, you know, obviously, you know, they took a hit, but even that's getting better. So, yeah, and I'll tell you, from the advertising side, we are seeing home builder advertising, which we have not seen here in 4 years. So, I mean, that's something that, you know, as a media company, we're starting to see that. And we've got our own little barometer here, guys, and that's our Spanish station. And obviously, when times are good, we do a lot of HR ads. And all of a sudden, the last month, we've done a ton of HR ads, mostly for construction, roofing companies, stuff like that. So that in our own little is our own little economic indicator that things are starting to improve here in the central part of Florida. Not improving at all in Melbourne, but Charles, as you well know, I mean, of course, that's all space related, and when you lose NASA, that's boy, that's awful. I mean, that was really awful. But yeah, good stuff on the confidence, really good stuff. And how about Ford? All of a sudden, the Ford F-150 is beating Toyota for the most American-made models, replacing the Toyota Motor Corporation and the Camry. So congratulations to Ford.
Well, yeah, and you have to remember that they're, the yen plays a very big part in that.
Yes. Oh, sure.
Sure. I mean, it definitely is a major influence there.
Yep, no doubt about it. But
so, we're up about $70. We were up about 110. We sold off to up only about 50. And the confidence numbers are running the bonds down a little, yield up. The 30 years up, 3.6 ticks. And so, we're getting a little bit of a sell-off there in the bonds. So, we've had that, and again, we've discussed it in the letter for the last month, that it is not the actual number, but the distance that it's traveled in such a short period of time.
Mm-hmm.
We were 1.6 on the 10-year a month and a half ago. Today we're 2.57, and yesterday we were as high as 2.67. So you're talking about something that moved, to put it in dollar terms, moved from $1.60 to $2.60 in, a dramatically short period of time.
Mm-hmm.
Now, of course, you're getting all of these, not Bernanke, but all of the regional heads of the Fed talking the market, kind of talking the market down here.
Mm-hmm.
With the discussion of, tapering and, so.
Well, you bought the market yesterday.
Yes.
You bought the S&P yesterday.
I bought
so
the
tell us
S&P
why you did
yesterday.
that.
I also bought the bond, the 3 times leveraged bond yields. We paid 50-50 for it. It's currently only 51.07, but if interest rates turn back down a little bit, what happens is that goes up 3-to-1. So if we get a 1% move to the downside in rates, we get a 3% move to the upside in that particular instrument. We bought the S&Ps because we've come down very hard, very fast, and we're approaching the 200-day moving average, which we tend to bounce off on a regular basis. And, of course, on Friday, even though it wasn't a spectacular day, we did close on the high of the day. And yesterday, on the over-the-weekend news from around the world, we opened down hard, and we bought the calls in the S&P for a bounce, which clearly we got. I mean, we closed down 119, I think, yesterday, and we had been down 248, and today we're up 80. So, it's going to bounce. It is a tradable rally. Just like they don't go straight up, they don't come straight down. So
yeah, but tighten your seatbelt, though, right?
Pretty much.
Yeah, wow. Hey, the big story on Bloomberg that I thought was kind of interesting, seeing that we can't even find Snowden. We've got the FTC talking about a probe in Europe that our Federal Trade Commission wants a formal investigation on gas price fixing. No. Of course, it's tied to the euro. So anyway, they want the help from London and all the rest of the EU on this. Fat chance. But anyway, there's an FTC probe, if anybody cares, on oil price fixing after the EU. So anyway, I know. I laughed at that too. I'm sitting there going, yeah, right.
And people don't realize our gas is cheap relative to the rest of the world.
No, and that's true. You're right. Yeah, you are correct on that. But yeah, it's amazing. By the way, in about 15 minutes or so, we'll have a guest. Boy, when Mike mentioned his name, I said, I've never heard this name before. And then he said he hasn't been on in 5 years. Asif Balagam from Green Parts.
Asif Balagam.
Yeah.
Yes, Asif Balagam of Green Parts.
Yeah, and boy, now I remember him. But you are right, Mike. I mean, we haven't talked to him in years. So anyway, it'll be kind of fun to talk to him. He is in Atlanta, GA. So yeah, some good stuff there. So what else is going on, guys?
That's not enough.
Well, I mean, I think you really hit it on the head with the consumer confidence. I mean, it's that's huge. I mean, that really is huge.
And yet, it's still a modest number compared to where we were in '06. In '06, we were at 140. In '03, 100, and here we are at 81, and we're happy because it is on the way up, but it's still challenging.
Yeah. Well, it's very interesting. I have talked now to maybe 4 or 5 larger businesses here on the Treasure Coast the last 2 days. And I don't know how, but the conversations always wind up come October. What's going to happen with the health insurance? And in the case of a couple of these companies, like here at our company, we pay 50% of the employees' health insurance. Well, in a couple of those cases, they pay 100%. And their insurance companies are saying, watch out. So it's like, what does that mean? That's one of those things that you just don't know as a business owner. And all of a sudden, here we are about 4 months away, and it's like, okay, what is going to happen then? It's going to be very interesting to see just what does transpire, with the health plan.
And what was last year's change?
Well, for us, to give you an idea, we've gone up 27% for the last 4 years for our increase in health insurance costs.
27% a year?
Yep.
Yeah. Mine went up 30%.
Yeah.
A year? A year.
Yeah. Oh, yeah.
And it's being self-employed, it's just 2 of us, and the health insurance cost is more than my mortgage now.
Okay. I was just going to ask you because the
higher than my mortgage, and my mortgage was not refied so that it's down at 3 or 4%. So that's really substantial.
That's the case with our business here. That's the largest check Carol cuts every month. Yeah. Oh yeah. Yeah.
I mean, it's just unbelievable.
Yeah, and it's truly amazing, and you just have to. And I think one of the people I was talking to employs 200 plus. I'm not sure, and they're just sitting there just hoping and praying that this doesn't go up dramatically.
Yeah. 10 years ago, 8 years ago, my insurance for the 2 of us was less than the yearly change this year.
Wow. Yeah.
I'm paying a factor of 4 times.
Yeah.
What I did 7 or 8 years ago.
And I
and it wasn't really cheap then either, but it certainly wasn't anything like this.
Right. Yeah, I know. I mean, and you look at, say, a company like ours, and we do not have a young staff, so it just keeps climbing. There's no doubt about it. It just keeps climbing. Yeah. And so it is going to be very interesting to see what shakes out with the new health plan. And what I also thought was quite intriguing was that one of the folks had talked about playing golf with the CEO of one of the major insurance companies, who was invited to the White House. And basically the message was, in a meeting that lasted maybe 45 seconds with all these CEOs sitting in the room, the president walked in, said, "This is my legacy, make it work or you're in trouble." That's it. That was the meeting.
Nothing like being in touch with the realities of the real world.
Yeah, and all the CEOs are sitting there looking at each other as he walked out, and that was it. see you, aloha. You know, and it's like, whoa, okay. Yeah, very interesting. So I guess we'll all learn come October just exactly what is in the bill, right? Finally.
Okay, I want to mention something.
Yeah.
I want to mention something here, Greg. In the market letter this week,
Yes, sir.
we discussed the fact that we're going to initiate a call-in on Wednesday mornings for anybody who is interested, whether they want information about trades in the market letter or they just want to talk about securities that they may own in other accounts. We're going to start at 10 a.m. tomorrow morning, and the dial-in number is 712-432-0075, and the access code is 614426. And that call will go on for as long as it takes, and people will be able to ask whatever they want relative to market opinions, specific stocks, where we see the market, on a go-forward basis. And so that will, as I said, start at 10 a.m. Eastern Time tomorrow. And if we get a good participation, then I will also initiate a call for Friday afternoons at about 2:30, because a lot of times we get set up for over the weekend, late in the day on Fridays. So, we'll see what subscribers are interested in hearing about or questioning on an ongoing basis starting tomorrow morning.
Okay.
I'll also, by the way, send out a text to remind everybody tomorrow.
Okay. We've already gotten call from a couple listeners. Repeat that number again, the call-in number.
Okay. The call-in number is 712-432-0075, and the PIN number, the access code, is 614426.
Okay, so 712-432-0075 with the access number 614426. We'll repeat this before the end of the show, but
right.
That's very cool.
Yeah. Well, a lot of the trading platforms, for example, the Ameritrade platform, which is Thinkorswim, and a couple of the others have services that they run. For example, Thinkorswim has something called the shadow trader, who comes on for 2 hours in the morning and 2 hours in the afternoon, and discusses what he sees in the market and short-term trading based on that. I don't want to deal with that short-term situation, but clearly any feedback that we can get or that investors can get about their own portfolios and stuff is, a big positive. And, at Princeton, we really want to service the clients, and so this is the next logical step for us.
Boy, that's awesome. That is awesome. Actually, I'll have to create a little commercial as to that effect as well.
And by the way, assuming that there are a fair number of people and that the call goes on for some reasonable period of time, there'll actually be a replay number. I'm not going to put that out yet because I don't know how many people will participate, and nobody wants to sit and hear a call with 3 guys on it.
Right.
But as we get more participation, there'll be a replay number so that people can catch up to it.
That's awesome, Charles. Yeah, it's a great next step. I mean, obviously, your texting service is like off the charts, and of course, sooner or later.
Well, this is the same kind of thing that our friend Oscar does. He has a chat room. I'm not willing to go that far until I see that there's demand for it. But he has a chat room with a solid exchange of information and discussions in both directions. And so this, as I said, this is the next logical step in order to help service our clients.
Boy, that's awesome. Well, congratulations. This is a big move. So is it going to be both you and Mike on
Just
that
me.
Wednesday, or just Charles? Okay, perfect.
Just me.
All right. That sounds great. Sounds great. And by the way, Mike will be traveling next week, so I guess we'll have next Tuesday off. So Charles, you can party hardy out on the island over there.
Yeah.
Just watch out for the sharks.
Yeah, that's exactly, literally.
Yeah, well, tell us about the newsletter, guys. I mean, what was featured in the newsletter this week?
The discussion about this new service and, the fact that the market looks like it has, as we put it, a tradable bounce here. We were short the gold by virtue of being long the DXX, which is the gold index reverse. And we paid $633 for it. I sold it yesterday around $730 or so. That's around where it is right now.
Asif Balagam.
Let's welcome Asif Balagam of Green Parts to our show. Asif, as you recall, Greg, Asif was on 5 years ago.
Yeah, I was going to say, it's been
And
a
now
long, long time.
He's brought the stock really moving. Stock is like a 30-cent stock, basically. And he's really created a dynasty here in Atlanta. A nice company.
So it is called Green Parts. Asif, tell us about your company.
Well, thanks for having me on the phone, guys, on the radio show. Exciting times for us. Took us 5 years to turn things around, but we're excited, and I think what we're doing today in the marketplace is a little bit different, and we always envisioned doing something a little bit different, and it's really turned out to be a very successful undertaking. Right now, we're a salvage company. We're a green company. We're focused on trying to maximize the products that we use to recycle, to use different verticals to increase our margins. Being a nimble operation, being able to use different techniques, different verticals to take advantage of different market conditions allows us to make money where others aren't, and it allows us to make more money when others are. So we're really sitting in a position where we've taken the skill sets of different verticals. Like, for example, in our business, we do used parts, we do recycling of metal, and we do shreddable material. Companies in our industry are doing one of those specific things, while we're doing all three in one location. And what it allows us to do is maximize the verticals of the products that we take in.
And what's the
Revenues right now, for example, are upwards towards 11, 13 million in sales, where 5 years ago we were around 5, 6 million in sales. We believe in the next 18 to 24 months we could achieve 25, 30 million in sales. And we've been profitable, for the last 4 or 5 years, so making money is not a problem for us.
Boy, that sounds great. Hold on just a quick sec. We've got Charlie on line 1, and he's got a question for you, Asif. Go ahead, Charlie.
AT&T stock has been taking a beating here. What's going on? What do you see? What do you think?
Well, Charles, what do you think? AT&T, not related to Green Parts.
This is just another example of a place where people were kind of hiding out in a not very volatile but a high dividend payer.
Yep.
And now with interest rates going up, like all of the rest of the, quote, hiding places, the REITs, a lot of the utilities, and a lot of the, telecom is a very big area, and they tend to pay fairly substantial dividends. So, they're selling there just like they're selling in the bonds. And by the way, those bonds that we were talking about at 255 are back to 260 again. So, telephone has good support down here between 34 and 33. It's down from 40 and, probably looks pretty decent right here. But it's not going to be the same thing that it was in the beginning of the year when we went straight from 33 to 40 in 3 months. Not going to happen again so fast.
No. I've held on to it for a long time.
Well, I mean, we've all done stuff like that, and Charles and Mike have talked
for the
about
long
that.
time. I mean, you're talking about a stock that was 23 in 2010, that basically came close to doubling, over that 2.5, 3 year period. So it wasn't a bad hold.
Yeah.
But you're not going to see that again so fast.
Yeah, well, my deal is to hold on for another couple of years, and then I'm going to try to get out of there, and, I'm hoping that we'll get a little bit of gain,
Great.
All right.
All right, thank you. Thank you very much.
Okay, let's get back to our guest.
Yeah, Charlie, thank you very much for calling, and now let's get back. We'll get back to Asif. Okay, there we go. Okay, tell us a little bit about you mentioned it took 5 years to turn things around, but I mean, how much of that was the recession? Affecting your company, because it certainly affected ours. There's no doubt about that.
Yeah, what we did was more than turning things around. What we decided to do was just reconsolidate our financing, just reconsolidate our operations a little bit, just fine tune it. We could have done this, like you said, we could have done this a lot quicker if it weren't for the recession and the financial markets, the lending and all those difficulties that businesses were facing. But that just shows you the commitment management had and believing what we had. We stuck to it. We knew what we had. We always feel we were undervalued. We still feel we're undervalued. The potential we have is enormous. We're running at a 45% capacity right now. So our growth organically is substantial and is available. Plus our growth, we feel with our acquisitions, strategic acquisitions, will allow us to really excel in our field and in our industry.
Why don't you explain to the listeners, give an example of something that comes in and what you take from it, and how you create that cash flow.
Okay, like for example, we'll buy vehicles that are deemed salvageable through either an insurance company, an individual that's just tired of fixing their old cars. So we'll buy this vehicle for what we deem as a scrap value. Through our internal technology, through our experience, what we'll do is once this vehicle is in, we'll inspect it and we'll decide what items will be kept for parts, what items will be shredded, what items will be sold to Korea. We have different verticals, and there's so many different integral parts of this vehicle that just brings extra value by just processing it a little bit differently. So we're a processor more than anything. We're not a commodity trader, or we're not a commodity buyer, but we specialize in the commodity field of processing it. So indirectly, we're miners, but we're miners with very little overhead and very little liability, meaning we know what we're buying.
The stuff that comes in, are you talking specifically about these big items like the cars, or do you do anything with electronics?
We're doing electronics, like computer, motherboards.
There seems to be an awful lot of stuff in electronics, precious metals and
the plastic. That's the beautiful thing about what we do. We recycle everything, even the plastics, the casings on these monitors, the casings on the computers. Those are getting recycled. The motherboards get recycled. Eventually we're moving into plastic recycling a lot more, cardboard recycling. So the demand is enormous for recycling material. It's a lot cheaper with the new technologies, the new equipment these companies have. It's a lot cheaper for for them to use recycled material than it is to use raw material.
Okay, Asif, what intrigued me a few minutes ago, you talked about Korea. So now, are you sending recycled material to Korea, or are you sending actual automobiles to Korea?
No, we're sending recycled material to Korea,
Okay.
Specifically engines and transmissions.
Gotcha.
And we're also doing Venezuela too. Venezuela is one of the highest margin markets. Korea is a volume-oriented market. One of our customers supplies products to Hyundai, John Deere, Kia, so the potential there is enormous. But yeah, Korea is one of our strong markets when it comes to our business, just because of our relationships more than anything else.
Okay.
Are you affected by the tremendous changes in advances in the materials that are used? I mean, I can understand, where, there's a value, for example, for steel scrap. But as people move away from it, say to carbon fiber or something like that, you still have strong demand for the older, more durable, more common materials that come out of these things?
Yeah, aluminum, copper, stainless steel, even steel, like structural buildings. You still have vehicles that are made of steel. I mean, even cars today that are made of aluminum, there's always steel-oriented products. So what we're doing is we're buying material that technically is being recycled to be built again. For example, a vehicle has aluminum bumpers, aluminum frames.
Sure.
So all we're really doing is the same material that they really need to rebuild their cars or their vehicles is the same material we're giving back to them.
Right.
So then,
And
just for example,
what's the cost? Is there a cost advantage to them? There must be a cost advantage to them, or they wouldn't be buying them. But
it's a great cost advantage to them, and with today, with on-time inventory. Okay, the good thing that happened from the recession, for example, is mills don't keep inventory on stock for more than 60, 90 days. So what's happening now is the real-time inventory, the real-time buying, the real-time selling. So what it allows us to do is being in the southeast, for example, a lot of the factories are moving down to the southeast. You have BMW manufacturing cars, Kia, Mercedes. It's just a better environment. So being where we are in the southeast, it actually gives us an opportunity to provide our buyers on-time material where we're able to make a lot more money for it. But
Asif, do you then have? I was just thinking of the god awful tornadoes that we had in the Midwest. Where you had a lot of damaged cars, a lot of damaged semis, stuff like that. Is your relationship also with insurance companies? Is that how do you get that material? How do you get all that material?
Yeah, it's this salvage industry is a big industry. There are companies that are publicly traded that just auction salvage vehicles. There are companies that are publicly traded that just sell used parts, and there are companies that just do scrap metal. So where we sit is we took a little bit of everything that these companies are doing, and we in-housed everything. So buying vehicles from insurance companies are plenty. Right now, we're in Georgia. We just deal with Georgia, for example, but our relationships with these auctions and these insurance companies are nationwide. And for us to expand nationwide, it's a flip of a switch. It's not like we have to build relationships in different states to acquire different material in those different states. Our relationships can expand us to all 52 states in the United States, and it shouldn't be a problem for us to grow in that sense. So getting the supply is not the problem, and having people buy the supply is not the problem. The key is buying it at the right price and selling it at the right price. It's just like Walmart doesn't have trouble selling in bad times or good times because their price point allows people to come in and buy. For us, it's about the way we process allows us to be very competitive in the markets that we're involved in, regardless of what the pricing pressure is going through.
Well, that's that.
So our unique way of processing allows us to really capitalize on what we're doing.
That sounds amazing. I mean, it's just say how many shipments, if you will, do you make, say, to a Korea or say a Venezuela on an annual basis?
Well, good question. Now, it all depends on the market conditions of these countries. The highest we've done to Korea, for example, we've done 200 shipments in a year. Currently, we're at a pace of doing about 120. The U.S. markets are very strong right now, so a lot of our shipments will go to the mills and the factories and the smelters in the United States. And we ship about, basically, we have to do a minimum of whether it's international or domestic, about 10 to 12 shipments a day.
Wow.
That's what we're doing right now.
That's amazing.
And how do you ship? Like containers?
Containers.
Right.
Yeah, it's all containers, open top or closed export containers.
So then from Atlanta, GA to Korea, I mean, how long is it going to be for a Kia or somebody like that to receive your part?
Those guys that are buying our material, it takes them, depending on the shipping company, most of the customers, would want the material faster, so we use a hunt. But it takes 21 days to get the material over there, 21 to 28 days.
Well, that's actually quicker than I thought it would be. Huh, okay.
Yeah, it's a lot more efficient now, especially Korea is a big export country. One of my clients was telling me South Korea is the largest exporter of oil, and they don't produce oil, because they import oil from the Russias or whatever, and they refine it and they ship it back out. So South Korea is very efficient, and getting material over there 21 days. The containers will go through rail, I guess, to Long Beach, the port in Long Beach, and then from there to go to South Korea.
Yeah.
Wow.
That's why Warren Buffett is making a lot of money. I mean, this rail, when he bought these rail companies, was a great idea, and he understood why.
Sure. Well, yeah.
Well, it's good to know that it's good to know that in this economy that there's something else for the rails to ship other than coal, because traditionally that was the big railroad shipping item.
No, and especially steel. Steel is such a commodity that it's a very high volume, low pricing point material. And rail is real important in our industry. Rail, logistics period, but rail is a big part in logistics. I mean, you could take over a market if we did what we did and we had a railing point for us. We could really make havoc in this region that we're in. Just because the way we're doing things is already a little bit different. It's getting the attention of everybody. Like, what makes us, at a time when our revenues are growing, other companies aren't, and it's primarily just because we have the ability, and I first saw it, 3-4 years ago. Many people questioned the fact that why was I buying this, or why did I invest the capital that I did to, I just saw it, and I see more happening, and we're ahead of the curve, and that's what we want to be, so that we can always be aggressive and be ahead of the game so that we don't get caught in the wrong cycle.
Asif, a geography question here. Would it make more sense, rather than being in Atlanta, to be in a place like the Metroplex in Dallas that could ship both, to both sides of seaports, if you will, to say the New York side or the Long Beach, Los Angeles side?
Let me tell you, I was once told when I was raising capital that they say they invest in people, not in businesses. Regardless of where the company is going to be, or what location. It's all about execution. For us, whether being in Dallas or being in Atlanta, it's more about being able to get into a business or get into an operation that's already got value once we go into it.
Sure.
And that's what we've done as a company. We haven't spent a lot of capital to where we are today. And what we try to do is strategically try to buy value, use management, use our techniques, use our skill level to increase value to these facilities and be able to capitalize. So different areas, different regions in the city provide different advantages and disadvantages. For example, if you're away from the metroplex, like if you're away from the major cities and you're out in the suburbs of the cities, you won't bring volume, but you could bring higher margins. When you're in the city, it's a lot more competitive, and you're dealing with a lot less margins, but more turnover. When you buy a port, you do a lot more export than you do domestically. So different regions, different areas bring in different advantages and disadvantages. The ideal thing would be to have multiple locations in different parts of the city and different parts of the state and different ports, so that you can take advantage of all the opportunities that are available to you, whether it's emerging markets turning back around, or is it domestic region, or is just being competitive by being able to buy material at a very low cost, being outside the city and in suburb areas. So it's just a matter of where the value is, where that opportunity lies. If we can acquire it, and then bring our skill level to take advantage of these opportunities. And because we have so many different verticals, being in different regions doesn't hurt us.
Mm-hmm. That makes perfect sense. Yeah, it makes perfect sense. Asif, you touched on emerging markets. Which one, in your mind, is the fastest growing market for your company?
I mean, South Korea. One of the most beautiful things about South Korea is they have no natural resources.
Okay.
So South Korea and the relationships that we have with South Korea and the South Koreans that we deal with, it's really for us. I mean, we get demand from India all day long, but we are very comfortable with our partners in South Korea, for now at least, and it's been great. And I still see, while the markets are tough, with China slow down, with the these capital restrictions they're putting in. At the end of the day, if it isn't China, it's Vietnam. Vietnam is growing right now rapidly because it's the new China of the Far East. So having South Korea as a trading partner, it really helps because they're in the region. So as far as the Far East is still a very high demand for it. I mean, we thought South America might be stronger, but because of Brazil, the World Cups, but we don't see that. But we really see still in the Far East. Today, Vietnam is really, from what I hear and what I'm reading, is Vietnam seems to be the growth story of the region. And I don't think, Far East is, in my opinion, a good emerging market.
Well, Mike King has been singing the praises of Korea and that whole region, whether it's Indonesia or Vietnam, for the 8 or 9 years on the air here. So we know how Mike feels about that area of the world, and that whole Pacific Rim is a pretty exciting place.
Yeah, and it helps us as far as it's the closest emerging market as far as U.S. borders go, whether it's from the West Coast. So it helps us, and we are one of the largest producers of recyclable materials still. So until further notice, I think we'll be fine. And Far East makes it easy transportation-wise, logistically. And right now we're doing fine. India has really knocked on our doors for the last 2-3 years, but strategically we've made a point where our South Korean partners are stronger and better for us in the future. So that's what we stuck with.
That's intriguing. That's really amazing. Charles, any stock questions for Asif?
Nope, not a one. I mean, it's a great business, and the way that they're handling it is, seemingly very strong.
Oh yeah. Michael, you were going to say something?
Korea is a leader in what is known as floating production storage offtake facilities. They're FPSOs. Like the big oil companies build these to drill oil offshore, especially all around Africa India, and all of these are made out of steel in South Korea. South Korea is the maker of these huge, like put together 10 aircraft carriers, and you have an FPSO, floating production and storage offtake.
Wow, I've never heard of that. Interesting stuff.
They're unique, and they drill the oil, find the oil, drill it, refine it, all in one place.
Wow. That is truly amazing, and of course they can't do it without the material from Asif. Yeah.
Right.
Yeah. It's makes perfect sense. Wow, this is really
so buy green part.
That's it. Very intriguing. Well, hey, Asif, thank you so much for stopping by, and don't wait 5 years to come on back, huh?
And what's the symbol for the stock again, Asif?
GNPT. GN, like green, PT
right.
Parts.
GNPT, okay. Cool.
Yeah, it's a great opportunity. I've been a stockholder for the last 6 years, and it's done well for me.
Good stuff.
So I really like the company, and
we're very careful in how we dilute this. We're very careful. We cherish what we have. We believe we could be in the NASDAQ listings pretty soon. The roadmap that we have ahead of us, the execution that we want to do according to our business model, business plan. I think if we're able to do that in the next 6 months, I think we'll be headed to that direction, and we meet all the important factors that it takes for us to be in the NASDAQ small cap arena, and we're excited about where we're headed. So, it's like, at the end of the day, we have to execute. We're excited about execution, and our past showed us that we're able to execute even through tough times. So, we've been a company since 1999 is when Green Parts was founded by me. We went through the 9/11s. We went through Actually, we went through the .com initially. Then we went through the 9/11s. Then we went through the financial tsunami. So we were able to overcome all of this without having to dilute ourselves, and using cash flow and our ability to just keep going forward. And we're excited about where we sit in the marketplace today, and the knowledge and experience that we have. We're just excited about where we can get to, and we're excited about being a fully reporting NASDAQ company soon.
Wow. Hey, well, yeah, good luck to you, and again, don't be a stranger, okay?
All right, thanks, guys.
All right.
Yeah, we don't want to wait 5 years to hear about it.
That's right. Boy, what an amazing story. Asif, thank you so much.
You're welcome. Thank you, guys.
All right. Wow. So they're moving to the NASDAQ small cap arena, huh? Kind of interesting.
Well, that's the key to a lot of these stocks. I mean, here you have a guy who clearly has a handle on the best, most profitable, most streamlined way to run his company.
Yep.
But until people start, until they're transparent, and until people can actually get all of the information that they desire on the company, and get eyes on all of the intricacies of the financials, etc.
Yep.
Then you really kind of have to market the stock the same way that you market the product. It's just a different group of consumers. You're dealing with investors instead of automobile builders, and so the more transparent he becomes, fully reporting, I mean, that will help the stock dramatically.
But what impressed me about, hearing him talk was the fact that, he talked about India and the fact that, it was almost like they could go for the quick bucks of this huge,
right.
huge company or country. but he's sticking with his partners in Korea. So
Yeah,
it's
I
like,
mean, it's the difference between the way that you should invest
yep,
and the way that lots of people do invest. If you have a broader overview of things, you continue to see the forest, not just the trees right in front of you. And so, it's nice to have a management that is not as concerned with this week, this quarter. I mean, it's important to keep your eye on it, but the fact of the matter is, as you lengthen the time frame, things actually become a little clearer.
let's think long term. Yeah.
It's interesting. I took my granddaughter to see a movie last night, and I highly recommend it. It was terrific. It's about four magicians. It's called Now You See Me.
Oh, yeah.
And it was terrific. I mean, it was terrific for an 11-year-old, and it was terrific for, an old fart like me. But the fact of the matter is, one of the lines that was repeated by these magicians over and over again was, the closer you look, the less you see.
Yeah.
And that is clearly the attitude of the markets.
Yeah.
When you concentrate on making 14 cents here and 19 cents there, very often you miss the $4 move.
Mm-hmm. Amazing. Yeah.
And so, he's clearly got his eye on a plan to move this company forward, and frankly, that's refreshing.
Yeah, no kidding. No kidding.
It's not like Walmart putting out weekly sales.
Right, exactly. Well, hey, let's talk about what's new at Princeton, and that is your conference call tomorrow. Is that correct?
Yep.
And that
yes, it is.
What, 10 a.m. Eastern time,
10 a.m.
right?
Eastern.
7
Again, the
a.m.
number is
Pacific.
712
Uh-huh.
432 0075. And the access code is 614426.
All right, so that all begins
And
tomorrow.
we'll take any and all questions about the service, this week's letter, or individual stocks that you might own in your own account that, we don't normally cover.
Boy, that sounds great. So Charles Moskowitz, the conference call from Princeton Research, and it will start tomorrow. The area code again, 712-432-0075. The access code, once you punch that in, is 614426. I've got the number here. If you missed any part of it, feel free, give us a call.
And I'll send it out by text in the morning.
There you go. All right, Charles, Mike, have a real good 4th of July. We won't talk to you next Tuesday, but we'll talk to you the Tuesday after. Okay, guys? Have a good holiday. You've been listening to Money Info, Princeton Research. Mike King in Las Vegas. Charles Moskowitz in Boston. Don't forget the new conference call tomorrow with Charles, 10 a.m. Eastern Time, 7 a.m. Pacific Time. Enjoy.